Thank you very much for that, Andrew. And first of all, thank you and Kevin for putting together a fantastic conference here in Singapore once again. Great to see that so many people are actually still traveling into Singapore to join this conference. Very pleased to see that, catching up with a lot of old friends. I am going to ask the panel to do a quick introduction of themselves, if you don't mind. It would be great if you could keep it relatively short, just quickly sort of your name and which organization you represent, and also very briefly what you're doing, sort of 10 seconds. Can I start with you, Christoforos? Yeah.
My name is Christoforos Bisbikos. I'm a partner of the asset finance team here in Asia, of Watson, Farley and Williams. I'm a member of a team which comprises of approximately 35 people dealing almost exclusively with Chinese leasing the past 15 years. I had the pleasure of coming to Asia in 2015, so I've seen how, from where it started and where it's come to. And the growth has been amazing. I've also, the team has also the luxury of communicating with other partners in 19 offices globally, including an office in New York, which gives us the ability to have a holistic approach on the matter.
Great, thank you. Kenneth?
Okay, I'm Kenneth Lam. I'm the founder and CEO of the ship-owning leasing company called SeaKapital based in Hong Kong. And before that, I've been a banker for Credit Echo for 30-odd years. So I'm very familiar with marine money. I'm very glad to be here.
Thank you. Good afternoon. I'm Alex Yan of Yangtze Maritime, which is a subsidiary of Yangtze Financial. So what we are doing in Singapore, we do equity investing for ships, and also we do leasing finance. We also do some chartering, and also some advisory agency and trading house services in Singapore, and also in China. Thank you.
Thank you very much, gentlemen. That's great. So, as you probably have seen from the program, what we're going to talk about is Chinese finance, and obviously USTR is something that's on everyone's mind. Unfortunately, I was not getting the answers from Andrew just now that I wanted to hear. I was hoping to get some clarity, but it seems it's still pretty clear as mud what's going to happen and how this will affect some of the owners. And certainly when it comes to Chinese leasing, which we're all involved in, will it be affected or not? But it seems, for the time being at least, that we have to assume that it will be affected. So just sort of setting the scene a little bit, a couple of brief numbers. Andrew also had a few on his slide. We have slightly different numbers, but we're not too far off. We consider approximately 30% of the fleet to be owned in terms of numbers, owned by Chinese companies. The order book is today standing at 32.5% of the fleet. 60% of the order book is coming from Chinese yachts. We have seen a lot of the current fleet and the order book being financed by Chinese leasing companies. We would estimate that it's around sort of 20 to 25% of the overall fleet being financed by Chinese leasing companies as per today. Seems to be rapidly reducing. And we also haven't really seen any less appetite for Chinese-built vessels. It seems that that's keeping up. But going over to the panelists and the people that has more sensible things to say than I do, I wanted to start with you, Alex, first of all. I mean, you're a leasing company in China, sort of classifying as what we normally talk about when we're talking about Chinese leasing companies. But you've been through a few changes recently. So you spun off. You were originally sort of associated with the Yard Group. You've been spun off. So I wondered if you could just share a little bit with us the rationale for spinning the company off from the Yard Group and then later the financial group of the Yard?
Yeah, sure, Nils. I think maybe most of our people here know the Yangtze. Yangtze is very famous in China and also globally. Why? Because it's the longest river in China. It's one part of the Yangtze River. And also for our sister group, Yangjiang Shipbuilding, it's also famous in Singapore. The company was listed here since 18 years ago, and it's a dividend stock in Singapore. So we develop a lot of values to Singaporeans, to international investors here. 3 years ago, we spin off Yangjiang Financial from Yangjiang Shipbuilding. And over 3 years, our Yangjiang Maritime Fund also built up a large portfolio, over the years. So maybe at the end of this year, we are going to plan another spin-off because, our investors, they like to see industry-specific investment. That's the basic rationale for this, third Yangjiang entity in SGX. Yeah, we do have a China investment, China colleagues, China staff, but we are Singapore entities here.
Exactly, and you're based here, right?
Yeah, that is true.
Yeah, good. And in terms of spinning off, are you taking over the assets of Yangjiang Financial Holdings, or are you starting from scratch when you're spinning off the additional entity?
Actually, for the ships, we don't distinguish the nationality, but we do have portfolio from China build, from Germany build, from the Philippines build, Vietnam build, Japan build, and the Korean build, and that is the ships of today. So that is the ship portfolio of the global trading. So we are not different with that kind of investment. So we welcome all the ships from all the shipbuilding nations.
So you're not tied to Yangjiang ships only, or?
Among 75 ships in our portfolio today, and another more than 10 ships which we provide trading hub services, that means 80 plus ships. We have 0 ship from Yangjiang Shipbuilding at the moment. Yeah, we did have 2 vessels from Yangjiang Shipbuilding, but we sold it.
Great. Well, thank you very much for that. That was very interesting to hear about Yangjiang. I'll leave you alone for a little bit now, and I'll move over to you, Christoforos, if you don't mind. So Watson Farley, one of the leading firms certainly in Chinese leasing here in Asia, and you are probably, as we speak, involved in several transactions. So you have a good feel for what's happening in the market. So being so close to the action in China, have your clients, as in the Chinese leasing companies, seen a lot of repayments in the recent months and, well, since beginning of the year, I guess?
Yeah, so when on the 17th of April, we saw the revised set of rules issued by USTR. Of course, I panicked, and a number of ship owners panicked, and they were calling me and they were saying it's the end of Chinese leasing. Yes, there have been call options. Call options have been exercised, but not to the extent that we were all expecting, and that is for various reasons. The first reason is that a certain type of ship owner needs to have clarity, and at the moment, and particularly as Andrew mentioned earlier, there is no clarity on the matter. We're not sure whether vessel ownership will capture ownership in the context of a finance lease, because a finance lease, doesn't ascribe residual value on the lessor. In fact, even from an accounting perspective, the vessel is registered in the lessee's name. So this type of ship owner, who is also willing to take advantage of the very much improved terms that the Chinese leasing community is currently offering, hasn't really pulled the trigger in order to exercise their call option. The other issue is, do people have the ability to exit as well? That's another interesting question. Top-tier owners have, to a certain extent, pulled the trigger. It's those who have access to maybe not equivalent financing, but to very, very competitive financing terms from banks, for example. And of course, let's not forget that these people are predominantly cash rich. They don't want to take the risk. There's certainly a perception issue, which has been been exaggerated by the charterers, particularly on the tanker side. Charterers are very aggressive in terms of any Chinese nexus. I think that this is, that this trend will definitely be rationalized in the future, particularly once we have more clarity as to what the term owner includes. So yes, also there's another category of ship owners who are taking advantage of the situation. They might call their leases now, but they take advantage of doing new deals, with better terms. So yes, I might get these vessels back, but I might do another deal for these vessels on better terms compared to the first one. So
I've seen in China or elsewhere?
Yes. So I've seen that as well. And then lastly, we have seen some leases being restructured, particularly with clients that have the luxury of having ships that are trading in the US, and they have ships that don't trade in the US. There you can do a blended product. Which allows the leasing to continue.
Okay, great. Well, thank you very much. And in terms of, just quickly, in terms of new business, what are you seeing of new transactions being done? Is that number just dropped like a wet cloth, or is it?
It's certainly less, but I can tell you, again, I'm going back to the 17th of April, and I've got some colleagues here. Back then, I thought, oh my God, we won't be doing any type of business. But in fact, we are far busier than what we expected with pure sale and leasebacks, because it also depends on the type of the vessel. If a vessel will never trade in the US, then why not do a deal, right? Or if the vessel is not subject to a long-term charter, where the charter is very aggressive. As I said earlier, some oil majors are very aggressive. People take advantage of the very competitive terms offered by the Chinese leasing companies now. So I'm far busier than what I expected, but certainly not at the level in terms of new deals of 2020, 24 and backwards.
That's the benefit of being a lawyer, isn't it? You need it in good times and bad times. So.
Exactly. Yeah.
Great, thank you very much. And Kenneth, over to you. So SeaKapital, it's been around for approximately 2 years now. So can you just enlighten the audience a little bit on what kind of transactions you have done?
Okay, very quickly, and also by way of a little bit more background. So 2.5 years ago, SeaKapital was started by myself and Sabrina Chow, whom is known to a lot of you. We started a company 50-50, and together with a group of shareholders that can be categorized as family and friends, who give us quite a good mandate in having a very flexible business model in terms of owning ships, leasing ships, both with operating leases and finance leases. So in the past 2.5 years or so, while raising the capital, we are doing deals on both fronts, and quite frankly, on the finance lease side, especially before USTR, the 301 emerged, the Chinese leasing companies are very competitive in that space. And I think all of us know that. So that part of the business, has not advanced as much as I hoped to in the outset. But we still, capitalizing, on the flexibility of our structure and the way we will do business, we still have some finance leases. But on the operating lease side of our business, we actually, not only we are able to take a bit of risk in terms of the right tonnages that we want to order with some partners, we are also able to make use of the liquidity provided by the Chinese leasing companies to support us. So on that part of the business, we're still a leasing company. So on our operating lease business, we are still backed by the longer term earnings, with some with leases ranging from 15 years, to 3 to 5 years. So we currently have a fleet of about 20 vessels, including new buildings on order.
Okay. Excellent. And have you, you are after all sort of, I guess, fitting into the classification as a Chinese leasing company. So have you seen any effect on your business from USTR? Do you see clients sort of having second thoughts of going into transactions with you? Or?
I think the short answer is yes, and thanks Andrew, for setting the scene. To be honest, I also serve in the Hong Kong Shipowners Associations, the various Hong Kong government initiatives. I also serve in the ICS. So I've been briefing USTR 301, for the last few months. So no thanks for Andrew setting the scene. So the legislation itself, originally from targeting the Chinese shipbuilding industry, at least from my perspective, it is now more of a target, through the April version with Annex 1 and Annex 2 in particular. It is moving more towards a UBO regime, focusing on Chinese operators, Chinese owners, and included in the Annex 1, Hong Kong and Macau operators owners are included. Yeah. So, but then, for example, in Hong Kong, we've got people like us, who are firmly based in Hong Kong, but we've got also other investors that would have other, say, the mitigating measures or other ways of tackling the issues. I'm just giving this as a background just to answer your question. Yes, for example, for the finance lease business, obviously, if the owner is thinking that the vessel will be going to the US, the projects will get slowed down. And on an operating lease basis, for similar reason, even if the vessel is not going to the US, if a vessel has to be chartered to a charterer, everything being equal, two ships, one is a non-Chinese operator ship, one is a Chinese operator ship, of course he would charter the non-Chinese operator ship. Yep. Even chartering our ship probably would be on the shorter duration rather than longer one. So we definitely affected.
Okay. And has it made you sort of change a little bit the way you're thinking about targeting clients and finding new clients, or have you sort of shifted the focus a little bit?
Okay, after I've said all this, I must be frank with you that, let's say by chance, all the 20 vessels that we are holding on are not targeting or going to the US, right? Plus, well, if you look at the numbers, people are saying, there's so many research saying that US is only 12%, of seaborne trade, and if you look at 2024 port calls, maybe only 5% would be Chinese operator ships. However, I really doubt that 5% include, say, Chinese leasing company finance ships, with them as the legal owner of the vessels. Andrew also set the scene that, this is probably something to be clarified, but I'm sure that if a potential customers who would want to be safe would certainly will also be very cautious, about that as well. So yes, we would have to think of, changing our business model so that we would be looking at customers that would not have ships going to the US. I particularly like Capes and VLs, so it's great. They are not going to the US. And there are also ways that we can look at it. I mean, we do not like to break any rules, right? So when you say structuring, you've seen, I mean, for the longest time, you often trust, charitable trust. I'm not saying that, but let's say just within the rules, right? Is there room that we can make use of the 25% rule well? For example, for our projects, right? If we reduce, our shareholding to 25%, and then there would be non-Chinese shareholding, for 75%, we would observe the rules. So I think we would work with the rules in rationalizing, our business model, rather than trying to do structure, thereby that would circumvent the rules. Because as I mentioned, it seems that, from the January version to the April version, it's moving more and more towards the UBO regime. And the April version probably is not going to be the last, and it's going to be moving more and more towards that way.
Yeah, can I just add, I mean, let's not forget that USTR targeted ownership and shipbuilding. Financing was never really targeted. Of course, as Andrew said, the net is very wide, and it potentially captures Chinese leasing as well. But the intention behind Chinese leasing in particular, and of course, Kenneth's company as well, is not to predominantly or exclusively finance Chinese-built vessels. We've seen them financing Korean vessels, Japanese vessels. In an ideal world, they could be financing US-built vessels. You know,
Absolutely.
so they're not export credit agencies. So fundamentally, there's something wrong here, I'd say.
No, you're absolutely right, and I think that's a very valid point you're making there, Christoforos. But in terms of, you know, when you're talking about USTR, and we had a bit of information about what's happening in the US. As we know, there's limited clarity. But what's happening? What do you guys see happening in China? What, you know, is this getting the attention at the top level? I mean, in terms of industries in China, shipping is a reasonable sized industry, but compared to many other industries, it's tiny and maybe not on the radar. What do you see happening with regulators, etc.?
I mean, I have to be careful because I'm not, you know, I'm not a citizen of the country.
No one is going to say anything,
yes,
so you say whatever you want.
But what I can tell you is that the Chinese leasing community has been very adventurous from day one. They've been very flexible. If you look at the structure that was offered back in 2015 compared to what they offer now, it's day and night. And of course, they are there to meet their client demands. They also wish to protect themselves as well, because remember, an ownership also assigns to them certain risks that they wouldn't have had they been a mortgagee financier. Let's say if an operator trades in peculiar, some interesting waters, right, and the vessel is sanctioned, then inadvertently they are caught out as well. So we have been advising Chinese leasing companies for a long time to consider alternative structures, and we have come up with a product which is akin to a sell and leaseback, but of course the registered ownership is not attached to the lessor. And my understanding is that they are exploring this option. You know, and I'm pretty sure, I'm confident, considering how things have been going, that they will be exploring alternative routes. I hear that USTR is also a part of the discussion, in the wider discussion about fees. I mean, that's what I hear in the news about tariffs. So we know that there's going to be a meeting next month. Who knows what this will bring? But again, repeating that financing was not on the target, an alternative structure where the leasing company is not the registered owner should not be very problematic for the wider shipping community, I'd say.
What about you, Kenneth and Alex? You got anything to add to that?
You want to go first? Okay, well, I'm a Chinese citizen, right? So should I be more careful than you? Okay. Anyways, well, I think the irony is that, right, with this trade action, originally we thought, you know, it would be the Chinese shipbuilding industry that would get hurt. But actually, from day one till now, they wouldn't get hurt because people still have to order in China. Yeah, okay. So now the way it's evolved, and I think Nils, I think you asked the right question. It is, I think any reasonable being would believe that this is something that would have to be escalated into some kind of the trade negotiation between the two countries, because it is now going into, like I mentioned earlier, you know, into a UBO regime. So I think there is a, I think it's reasonable, you know, to expect, you know, some. And hopefully, you know, something would be resolved at that level. But I also want to mention one thing following Chris, you know, the answer. The world is very practical, and actually, I've seen it in I've said this in other occasions. The fact is that we need those Chinese leasing companies' liquidity for the next generation of vessels that are not even ordered yet. Without them, I don't think we would have enough liquidity. At the moment, it seems fine. Owners, you know, are powered with cash, you know, and then, you know, there seems to be a lot of foreign source of liquidity as well. Especially they have not been doing much, you know, in the last couple of years. But I mean, time again, we've seen this, you know, all these things will dry up, and because of the capacity that is required, there would be some kind of mechanism or flexibilities or reality that, you know, that liquidity has to be tapped. And the thing is, the more difficult it is to tap that liquidity means inefficiencies, right? Inefficiencies mean high cost, in the end, it is going to be the end user, the consumers that will pay the bill.
Because today we are talking about more money, so I think, in terms of geopolitics, we are very innocent. But in terms of shipping investment, shipping financing, yes, we are expert, right? We all know something regarding to shipping. In terms of confidence interval, I think we have a higher possibility that US will start this USTR with the Steel 01. That is for sure. But in terms of the figures for the confidence interval with the affection of this policy, I think that should be manageable. We do have enough shipbuilding supply from shipbuilding nations. We do have enough shipping capital or maritime capital from all the maritime nations. Is China prepared? Is China ready for this policy? I think yes. They will manage, they will handle. Because they are number 2 economy. They are also the largest shipbuilding nation, I think in terms of gross tonnage. But also they are one of the largest shipping nations, for the ownership. So they will still continue to service the global economy. They will survive. And the US, for sure, they need to catch up. Why? Because I don't think any of us in this room remember American shipbuilding. Why? Because 80 years ago, they stopped, for the commercial shipbuilding. So nobody is 80 years, right? Even 80 years, we are still very young. So how can they catch up? I think over the 80 years, 70 years, they only built some commercial ships in the late 90s or early 2000. But they delivered the vessels only in 5 years. Very long delay. They need to catch up. They need to, balance. Yes.
Okay. Kenneth, just want to quickly respond.
I think it's probably final sentence for everybody, right? But I just want to, especially with this educated audience, I just want to say that for shipping. I think just like most of the rest of the world, we advocate free trade, multilateralism, and a level playing field for all. And when we're talking about these actions or legislation, it seems that it's beyond us, beyond the private sector. But I think together we should strive for the unity. So please, do speak to your respective, shipowners association, trade organization, to say that we really want to remove all these trade barriers so that we can enjoy open sea and we can enjoy level playing field for all. Maximum unity, please.
That's great. Thank you very much. I do have one yes or no question very quickly. Sorry. Just asking, I know this is a little bit unfair, but I'm sort of going into politics now. So do you think these rules are going to change with the next administration in the US? Yes or no?
No, because it's a bipartisan. It's something that started from the previous government, but it can certainly change.
Yep.
It will not completely go away, but there will be the changes to make things very practical because US consumers do not want to pay the bills.
Okay.
I think geopolitics is also cyclical like shipping. So it will change one day, but the competition will be there. As said by Mr. Lee Kuan Yew, China and the US, you cannot avoid competition, but you can avoid conflict. If we cannot manage, we will suffer.
Great. Well, thank you very much for that. Really appreciate your time on the stage, guys. Very, very, very interesting.
Thank you.
So, thank you.
Thank you.